Hey traders, Nick here. Wanted to run through a few tickers that showed up on my screen today. This is a scan that I do often, and it shows up with a whole bunch of tickers that are tight and have moved on the short term, but not on the long term. So the insinuation there that there should be a move that follows when the longer term charts catch up with the shorter term move. I'll start with Apple, which was kind of didn't show up on that scan, but showed up on my own scan, which is tightening in the range. You can see went from trading from here to here, from here to here, and then out to a pinpoint. You know, if you wanted to, you can draw a line this way and that way, and so a move is coming, and it's not obvious in which direction. So they could loiter here for a little bit, and this ghost line right here shows what has happened before, which is around this time. And this area right here is similar to where we are. So they could loiter and drift lower. I think they would need a catalyst to rise. So maybe good news on the iPhone deliveries or something like that. Otherwise, they might loiter or weaken. So it's not an obvious entry point for Apple. This did not show up on that scan, by the way. But it is a large company, and I like to cover it. So this is Philip Morris. It did show up on the scan. And technically, it's not looking good because it's had this slide, but it's butting up against a floor that has stood strong for a while, and I drew a box to show that it extends backwards as well to last year when it was resistance failed, then they busted through it and have used it as support since then. I don't know what's the deal with that candle there, but if I were to sell puts, I would definitely stay behind that line, so it'll be down here. So what happens here is two scenarios possible. They use it again as support, but if the bears prevail, they'll overshoot lower. And usually, technically, it's a little bit lower than this, but I stopped somewhere around here because I looked to the left, and there has been pretty good consolidation, even just below that. So here's another zone here of consolidation, meaning they'll fight it out. I don't see them losing 110 easily. I don't even see them losing 112 easily, but it is tradable somehow. I don't know if there's an event coming, maybe earnings or something like that, but that's my opinion there. If you know the intricacies of Philip Morris, I like it for the long term from here. It's an ascending channel. There's no reason to break it unless the actual fundamentals have changed, okay? Or a market-wide correction, obviously, will do it. Okay, next is Kinder Morgan. Looks like there's a move coming because of the tightness of the stock, higher lows knocking on a roof. But look at where the roof is. This is a point of contention. You know, they fell out of sorts here, and then they lost it and they came back to it. This is a pretty telling volume right here. Boom. And then they gave it right back. So they come back to this inflammatory level here. What happens from here is almost a coin toss. I don't know the intricacies of it. I don't know the ins and outs of Kinder Morgan. But I can imagine that there are dividends issue there too and rate issues. So if rates fall, then this might get some steam into the stock because it's an alternative. If it pays dividend and the rates are not paying anything, people might pile into dividend paying stocks. That's the type of deal. So I would do homework there before I pick a direction in which it's going. I like higher lows knocking on a roof. Often enough, they bust through the roof, and if they do, they overshoot higher. Look at this, higher lows. But here there was a catalyst, and here I'm not sure that there's a catalyst coming soon. Maybe, let's see, 1 month, 2 months, maybe in a month or so. That's Kinder Morgan. I think next is Western Digital. There is a lot of headline risk around this name because I think it's involved in some sort of an acquisition. I can't remember exactly what it was, but there is a headline looming or coming and going, debate around it. Let's put it this way. Again, tightening range right in the middle of the past whole range. So if I draw a line here, I draw a line here, they're right in the middle. So it's in balance, which makes it a coin flip. But in an upward moving market, I would want to bet up. That's personally. However, technically it's looking a little unsure of itself. Red days are coming on higher volume than green days. That's something to pay attention to. But that happened here, and the stock rocketed. So if I were a betting man, I'm comfortable selling puts in it on dips. So even if they break through it and they lose that trend, and the line to look at is right here. So 86. If they lose 86, then they could see 84, then 82. Conversely, I would look to break away from this lower high trend. So pay attention to what's going on there. Do your homework on it. I'm doing this because a lot of people among us trade these tickers, and I've seen them before. That's why I brought them to our attention. Garmin, that is a very tight picture. A move is coming. Direction is totally unknown. I don't like it. But if they can break through that roof, they could try to do this again. So the debate here is 53 versus 51 and a half, 51 and a quarter. So if they break this ascending line, they're going to come down to 51. That's where they fell. And 50, this area right there. If they break this roof, they try to shoot to 53 plus, so 53.50 or so, 53.30. That's the battle there in Garmin. This one is, I don't know. It just showed up. It's a real estate of sorts. They pay dividends, so I don't know if it's a REIT or what. But anyway, it is tight, to say the least. Lower highs, higher lows coming to a point. A move will come. Up or down, I'm not sure. If I was a betting man, I'd bet against real estate at this point. So I think 118-ish, 118 and a half before 122. But these are the two lines, 118 versus 118, 122-ish. Okay, so I don't know what that is, but it showed up, and that is bearish. I would not try to catch this falling knife. A move is coming, and I bet it's lower. So 38 would be the next stop there. And this is a knife I definitely don't want to touch, try to catch, not even with metal gloves. Okay, the host hotels and resorts, also bearish. I wouldn't be surprised if I saw 1760 soon. This line looks like it wants to be breached. Depends on this candle today. This was taken earlier today. Sorry about that. So move coming, earlier charts, not sure which way it's going to go. I don't track it, but I know at least I've seen it requested from me a couple of times. This is another one that showed up. I don't know the fundamentals. Technically, it's looking frisky, higher lows knocking on a roof, and that roof has stood for a while, and they're taking their time. So it's like a giant cup and handle. So if I were to draw, hey, technical lesson right here. You hear cup and handle. Inverse head and shoulders. So this is a cup and this is a handle. So the motion, I mean, I could draw one here and say, okay, it has upside potential, but the other one has bigger upside potential. So I wouldn't be surprised if they try to go for this, but they have to breach this zone that has been detrimental for them for so long, the bears. So, you know, watch for that. And if they can add a few more pennies, then they can definitely blow out and at least try to go for 1650. I don't know the fundamentals. Do your homework there. There might be earnings. No, there isn't. There shouldn't be any earnings anytime soon. So these are tickers that just showed up on a scan. I don't speak to their fundamentals. This is a purely technical video. Let me know if you have any questions. Trading them, if you want to try to catch an upside move, debit call spread, downside move, debit put spread. If you're really ballsy on it, you can do with naked calls buying or naked put buying. Timing wise, if I'm doing a spread, I like to give myself some time. So I'm not going to be cute and trying to do next week's. I'll take, because the spread is going to cost the same if I'm near the money now or later. So I want to give myself some time on the clock. So maybe go October. Depends on the earnings also. If if I take a spread into the earnings, or if I buy puts or calls into the earnings, they're going to be a lot more expensive than just a week before that. So it all depends on what I'm expecting. If you have any questions, let me know. Nick signing out.